Hey, everybody. Today, I'm going to talk about a conversation I had this afternoon with a client that I've actually known for 3 years as they've been renting here in Denver. So he reached out because he wanted to kind of pick my brain on should they think about buying or should they keep renting. Now, bear in mind, they just got notification on the same place they've been renting at. The rent is going to go up 31%. To be fair, their landlord hadn't raised their rent in some time. So it's very probable the landlord just playing catch up. He was curious about, why would possibly they be raising it that much? What costs could the landlord have been incurring that they weren't in the past? And let's be honest, in Denver, property taxes have gone up substantially. Homeowners insurance has gone up substantially. In fact, the homeowners insurance is a problem all over the country, and definitely for those who own condos, those who own short-term rentals and rentals in the mountains. It's a problem with homeowners insurance. Now, bear in mind, this is something that earlier this week, a first-time buyer talked to me about. Her concerns were related to the increase of property taxes and homeowners insurance to make sure it's affordable when she's thinking about buying a home. And that's a very astute observation from someone who doesn't even own a home right now, which is, will I be able to afford it if these items go up in the future? What will that do to my monthly payments? So I love what I'm seeing from people out there who are thinking about buying right now. It makes for great conversation. So let's dive in a little bit more about what he and I were talking about earlier today. What we were talking about is $800 a month increase in rent. And does it make sense? Now, his situation is slightly different because it's possible that in a handful of years, he leaves the Denver area. Now, if that's the case, as you heard on my last live, there are other considerations to make than to just jump in and buy. And I'm happy to hear people thinking longer term. I love having those strategy sessions so that we can help plan in advance for the future rather than say, sure, you should buy a house. And so when you're out there shopping around, if you're looking at houses online, I'll just share a pro tip with you. Be careful when you click send me more info on a house. I'll tell you why, because if you're on those websites like Zillow and Redfin and Realtor, you are going to get blasted as soon as you click on that. You are saying to them, go ahead and sell my information. Allow your solicitors, those that have bought leads from you, to call me. And that's not a joke. That is legit what's going to go down with the Zillow, Redfin, Realtor, Homes, etc. I'm not knocking those websites by any stretch of the imagination, but that is just kind of behind the curtain what's going down there. So with him, as he and I were talking, the thing that we were discussing was, what are my thoughts about the housing market? Now, about 10 years ago, I made some comments related to, will that generation, now this would be you all millennials 10 years ago, be the last one to have a chance to own a home? And I mean own a home outright, zero mortgage, own the house free and clear. If you think back to what the average cost of housing was 10 years ago in the Denver area, look at what it is now. And it's very much probable, short of someone having a massive down payment from, say, inheritance or something, that by the time you end up not owning the home any longer, you still have had a mortgage on it with the cost of housing today. Does that mean you shouldn't buy? No, it doesn't. Does it mean you should buy? No, it doesn't. Again, you got to think about what is going on in your life. And I'm going to share my screen because there's something that's important for you to know. If you don't know what Blackstone is, this is certainly something that you do want to be aware of, because what is going on is, look here, this is just their homepage. Blackstone, the world's largest alternative asset manager with more than $1 trillion assets under management. Institutional investors, individual investors, and there they go with real estate, and 240 plus portfolio companies. So this is not a knock, but they have scooped up homes. And will it mean that Gen Alpha and some in Gen Z might be stuck renting and end up in a renter nation in the future? It's not to say it will happen. It's not to say it won't, but it is something to think about, because if they buy up these homes, they're not going to sell onesies and twosies. That will be packaged up in a portfolio, sold off to some other equity firm, and therefore that will become the landlord of the future as they try to box out even people like me that have a handful of rentals and they want to own the asset. So let's think about this, because now I'm going to share with you this aspect. Why would they want to own the asset? And frankly speaking, as you see this chart come to life here, 7 recessions from 1980 to 2020, even in Colorado here in Denver, where the housing crisis occurred in 2008, and that recession from the housing crisis occurred, If you take away the hyperinflation of COVID home prices, oh, by the way, note here, home prices now are even higher than they were in 22 when interest rates spiked up. So home prices have grown slightly since that time, but they still have rebounded after their initial pullback in that time. So Q1 1980, Q1 2020, 4.55% appreciation. So why would these hedge funds and these equity firms want to own the asset and have you rent from them? 4.55% on an asset that will continue to go up in value. You see 4 decades of data there, and it is something that you do want to keep in mind. So again, if it turns out that they do leave Colorado in the next few years, then it gets into, do you see yourself being an investor? Do you see yourself being a landlord? If the answer is no, and you know you're not going to be in Denver, then that $800 a month, as he said, might be a trade-off. It's $9,600 a year, but the cost to sell, if that were, let's say it was 7% to sell the property, do the math. 7% is 600,000. The rent over, say, this many years. Very astute observation, great analysis to help him discern if they should in fact pay more rent or buy the home. This is all amazing. And as we continue to see the stubbornly high mortgage rate, stubbornly high. So why do I have this wild chart in front of me? It's because as we've seen, mortgage rates came down, went up, and have come back down a little bit, but they went up through October. So why am I drawing this chart out further? Because we know rates were obviously higher in October of 23, almost 8%. However, one thing that I've talked about on other videos is that after elections, historically, interest rates have gone up. Even though I just talked about that 8 out of the last 10 years during this time, rates have come down. Inflation continues to be a challenge. I don't project the Fed to cut rates anytime soon, as long as these reports keep coming out about inflation, because they cut rates and it hasn't changed things. And then we have a new administration coming in. They're anticipating higher cost of goods. Trump has already mentioned it. And the companies are already saying that they will unfortunately have to pass those costs on to us as consumers, which will keep inflation going. Therefore, does that mean interest rates are coming down? Let's be honest, if interest rates do not come down, this is going to sound weird, it may be the healthiest thing for the housing market. And why is that? Because if they were to drop 1 full percent and a bunch of people that's been on the sidelines did get in and decide to buy, we all know that would become inflationary and home prices would go up. So for those of you who are thinking about buying soon, interest rates being stubbornly high might be healthy for you because it might keep you from having to buy a home that's that much more expensive. Even though that the rate would have gone down, if you're buying a more expensive home, you may be not getting ahead in terms of your costs, except that you might have taken out more debt while financed at a lower rate. So today's thoughts for you for Maestro Minutes. I hope you're having a great week. If you want to discuss your situation individually, Calendly.com/Mortgage Maestro. Be well.